The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. Tommy O'Brien, Tom O'Brien. We do appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials up 28. We have the NASDAQ up 1. S&Ps are down 3.5. We have the gold contract off $4.20, trading at $1,322 an ounce. Silver is up 11 cents at $18.52. We get the oil market down $1.25 at $48.61. Notes and bonds just continue to basically stay at highs. They rejected lower price, both of them today. Had lighter volume. The 30-year went topside by 2 points already from its lows. King dollar is up 143 ticks at 95.95. And bottom line is that we could be next to each other almost.
I thought you were going to say something about the market, and I was going to say bottom line is you're feeling better, and definitely, and I can jump back in studio. It's awesome, for sure.
And a lot, yesterday I thought I had it yesterday, and then when I started, it just went away.
That's good. You were feeling. Yeah, I'm laughing, but it's good you were feeling good. That's the most important part.
And you know what's cool? Tim from Denver called in the afternoon, and he said he had it too. And he says, "You got a couple more days." And I said, "Okay, that's good to know." Because like when
it's tough, man. It lingers. It does. So,
yeah, and the thing moves around. There's no doubt. Now let's go to our man, Mr. Kevin Hinks from TD Ameritrade Thinkorswim. And don't forget, folks, every trading day, right here at TFNN, 12 to 1 Eastern Standard Time. Kevin, Scott, Cindy, they have a great program. No matter where you are listening right now in your car, always remember you can get it right on your cell phone, TFNN.com. Hit Tiger TV. You're going to get great HD video as well as audio. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. How's everybody going? How are we doing today?
Going great, man. I love that show yesterday, on the VIX, man. That was really, really well done, Kevin.
Well, the VIX is something that it's in every. If you're in the options world, it's part of your everyday life, right? And it's basically that measuring stick.
Right.
And I said last night. We did another podcast last night, and I said, I've never traded an option in my life that I didn't know the implied volatility of.
Right.
Right? And so that's the basis for making your trading decision.
Yeah. You know what I thought was so cool, and there's a couple of different things that happened this morning coming into work that I cracked up about, that if the people that had talking about this on Bloomberg would understand how the VIX really works, they wouldn't have been saying what they said. And I always understood that, the VIX, I know you go out the first two cycles and it's based on at-the-money calls and puts, okay? What I didn't know when you and Scott were explaining it is that you're actually taking the SPX and you're going back in time, too. Do you know what I'm saying? It's like, oh, man. So that's the basis. That's the foundation where it's coming off, okay?
Sure.
Which was really cool because that would make sense as that the VIX was going down even on Monday when the market was going down because of the correlation inside of that. And I says, okay, man, I get that deal, which was really cool. Yeah.
And it's funny. We had a couple clients comment on the fact that another financial station did a whole thing about why the VIX was down when the market was down on Monday, and he goes, well, TD Ameritrade clients already knew that. Because we listened to swim lessons in the morning, and you told us why it was down, with the market down. So we already knew what they were talking about before they even said it.
And yep, and no doubt. And this morning, just literally an hour ago, just coming in the office, I was just listening to Bloomberg, and they got something that was wrong, and it was like, oh man, And I would have known that part of it without knowing the part of where it's coming off. I knew it was the first 2 months going out, but it's the coming off of part. Where's the foundation? Where's it start from? Do you know what I mean? So it's pretty wild.
And what I always say about options and the options world, Tom, if you're not sure what you're talking about, don't try to fake it.
Yeah.
But you'll look terrible trying to fake it.
Right. Right.
So when people come on TV, sometimes I turn into a major critic when I'm like, that's not correct.
Well, you know what it is? It was like a binary deal this morning. It was like, oh no, that's wrong. It's not just, they might be wrong. It's wrong. You know what I mean? What they were saying.
Right.
Yeah.
Right.
So,
and it's sad, but it just reinforces how important swim lessons is.
Yes. Right. And what I saw is that, if you pay attention, the lesson, folks, was, like 22, 23 minutes, okay? It was a great lesson. But guess what? In the 23 minutes, you're going to get a good foundation, and you can go over it, a few times and look at it on the chart and say, okay, now I understand what that number is based on, okay? Which is pretty cool,
Right, yeah. It's always, it's fun, it's interesting talk. We try to keep it as timely and as topical as we can with what's going on today. We try to help everyone today with their topics. And let's face it, Tom, between midday today and the end of tomorrow, it's going to be less and less eyes on the market.
Oh, yeah.
So these are the days to work on our fundamentals.
Right. No doubt.
And still continue to learn something and have it worth turning the TV on or turning Thinkorswim on. And that's what we're going to do today.
I like it.
Isn't it funny, Kevin, you said turn the TV on because, like, mentally, literally, the web is becoming that type of a mentality.
That cool?
And I totally agree that it is. It's turn the TV on because we all watch Netflix, we all stream video, we all watch Thinkorswim, right on there, we watch Tiger TV. It's that, but that's just awesome that it's now watching TV.
If I'm not watching Tiger TV during the daytime, I think there's something wrong.
Trouble, man.
Isn't that cool? I love it. Totally. It's got to that point, Hey, Kevin, have a great... Oh, listen, man, have a great 4th of July, too, man.
Have a great 4th, man.
Have a great day, guys.
Okay.
Take care.
Stay right there, folks. Tommy and I are coming right back. The Dow's up 47. NASDAQ is down 2. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is up 42. You get the NASDAQ up 4. S&Ps are down 3.5. And let's see, we have the DAX is off 11. We got the gold down 820. They're hitting that market a little. So, coming into July 4th, a couple days of, a couple weeks of high volatility. And, I think people are going to go on vacation today.
Yeah, I can see it for sure.
Kind of feel
Especially
it?
with the flat market already. It's
Right.
like, yeah.
And
That's a perfect excuse to start the weekend.
It
right?
is a
You know?
perfect excuse. And if we go overseas, that's exactly right, I know. If we go overseas and look at the UK, you're going to see the UK overtook its highs. I mean, I can't wait to see this volume. Yeah, it's late volume too. But that's what I was
And
deviating.
again, nothing's probably going to be able to compete with that, Friday volume, right?
Right.
That's
right.
It's just going to be
that's right.
such a battle.
Right. So what we had with the UK, folks, so check this out. So 63.80 was the high on Thursday. The vote was Friday, right? It goes from 63.80 in one day down to 57.80. 500 points, right?
And then back up?
And then back up.
Yeah, I know.
Now, the real the real kicker out here today is that is it going to be able to hold the 63.80? Now, this is where this gets interesting about the number correlation. Yeah, let me put the DAX up next, so I can show you what the difference is. So the DAX never came back. The CAT in France never came back. And, of course, we go back to the FTSE. The FTSE came back in an extraordinary way. Well, what happens if now let's go over to the pound. And what you're going to see here, now this is where it gets really cool. So this is how smart these hedge funds guys are, just big operators are. Because the pound went down so dramatically, right? The market over there was on sale.
Sure.
On sale depending when you bought it. Right now it's still on sale by 10%.
Yeah.
If you bought it at those lows, it's like 12%.
Right.
So it's like.
Yeah, in dollar terms, it's down, right?
That's
No?
correct. Yes.
Somewhat.
That's
To
right.
think about it, right.
In almost, yes, in dollar terms it would be down, in yen terms it's down.
Right.
But in order to, those big players, they said, hey, hold it, we're getting this.
Yeah, we can buy those equities.
We can buy these equities, we can buy them at cheaper
And
money.
I'm sure those equities are going to benefit from the same thing, maybe, because especially if they're focused on goods sold in the UK or sold in pounds.
Or even overseas.
Right.
Because
That's
it's
it.
cheaper.
Yeah.
The Burberrys of the world, those
Exactly.
big high-end places in the UK. So it's pretty wild what can happen so quick.
Oh, yeah. There's a lot of relationships coming together.
Oh, these currency relationships for folks are intense. There's no doubt about it, man. So.
We got natural gas coming up after next week.
Oh. Let's take a look at where natural gas has been on fire, man.
Yeah, it's up again today.
Okay, so you're at 290. Look at that. So it's spiked higher with volume. Now, this is where it's going to get interesting because this looks to me like an ABC up. Man, it's a big one, too. It's like that A point is 220. The B would be 280. So you're talking 60 cents, which would be 320 on a long-term basis. So we came. Look at that. So you came down with a little volume. You went. That held it there. It's going to be a tough one, man. UGAZ. We've got a lot of calls about this in the past. That finally, you talk about. That finally came off the bottom. Look at that.
Yeah.
That's a triple.
That's a triple.
That's
yeah.
a triple. So, and folks, if you haven't test drove the Nadex platform, it's a great time to do it. You can come over to our website at TFNN. You hit the Nadex banner, bring it up. They'll put $25,000 of paper money into your account, and you can see how these defined options contracts trade. And I believe, I don't think London, it's not that they'll have any business going on Monday with July 4th, but I believe that they're probably open. They don't have a holiday, I don't think.
No, they don't celebrate our independence.
No, they
definitely
don't. They definitely don't celebrate that. But what happens is that sometimes our holidays, they have different holidays.
Yeah, no,
No, that's not going to happen. There's no doubt about that. Let's go take a look and see what's inside this marketplace and running it inside the Dow.
Ironically, I heard a joke, and I think it was on maybe John Oliver or something, and it was talking about how...
Yeah, I watched him. He's awesome.
He does a good show on HBO. HBO has so much good programming they do. But it was about, everyone's like, UK is going to take back their independence, right?
Yeah.
And then his joke was, do you realize in like 4 days we're celebrating our independence from the UK because they're that independent already as part of the, it's just that funny. We're celebrating our independence from them. They're doing just fine on their independence either way,
Yeah, that's a fact.
It was amusing to.
No, that is.
Yeah.
The laggards inside the Dow Industrials today is the Visa down 1.2%. American Express is off 0.8. Home Depot's down 0.8, and Nike is down 0.3. Putting juice into it is GE up 1.2. Intel's up 1.2. Boeing is up 1.1. Inside the NDX 100, what do we have? Look at Endo. Endo's a trip. So Endo's the laggard today, down 4.3%. Tractor Supplies down 3.7. Liberty is off 2.9. The leader out here is NetTea's up 3.5. Is that Paychex? Paychex is up 3.5. A lot of people get employed, evidently. Discovery Communication is up 2.3. Discovery has a lot of good programs on, too. Shark Week's on.
It is. Maybe that's why it's up. Shark Week is. I've been watching plenty of it, too.
Have you?
Yeah. I like it.
I was going to go visit John Logan in North Carolina until I saw all those shark bites down in North Carolina. Oh,
yeah, they had that one summer, like a while back.
Last summer.
Was it last summer?
13.
Okay.
And they had the kid on. They had this kid on that his arm was gone. And
I think I might have seen some of that one.
Yeah, he was only up to his waist. And he says, I felt, I thought it was a stingray. And he says, all of a sudden he reached up and grabbed him. And they're helping him.
He's lucky, too, when you put it that way, in terms of like, hey, he'll have a nice, I'm sure he wants both arms, not to put it, but a lot worse things can happen when a shark gets that good of a bite on you when you're probably right? I mean, seriously, that's...
Totally.
Whew.
And I've never been to the Outer Banks. I'd like to go fishing there, but...
The scary part is that, man, it's always like waist deep or shoulder length.
It is.
It's not where you're like swimming in deep water.
No.
It's when
right.
you're... Yeah.
Right.
Keep your eyes peeled.
And they say most of the time it's by mistake,
Oh, well, yeah, they don't think you're a human.
Right. Because they don't like humans. They want
seals.
Yeah, right. Seals.
Big fatty seals.
Like down the Cape now. Down the Cape, folks, okay, there's a big problem.
There's a spot now, right?
Oh, yeah.
Up by the
Chapman's Bar Inn. Well,
okay.
It's for down further.
Yeah.
But it's where all the seals are. That's the great whites come by.
Hey, that's how the food chain works, man.
Oh, man. Come here, fishy, fishy, fishy. Well, the food chain in the market, folks. I think the bear food chain is just ready, once again in the marketplace. So it's going to be pretty.
Think bears are ready to eat?
Oh,
They're waiting for those.
I started eating this morning. I didn't think I was going to start eating before the 4th, but I started eating again this morning, man. I think this is it. Yeah, get those salmon on the grill. Oh,
salmon,
you know what I did? I
took.
You know what? Oh, you know what it must be? I took honey to get better.
There you
That's
go.
what it was.
The bear's been fed.
You stay right there, folks. Tommy and I are coming right back. Dow Industrials are up 26. The Nasdaq is down 2. We're going to be right back.
Today, many commodities are trading at relative lows.
Yeah, I did take
And
that.
now you can take advantage with Everbank's new limited-time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 26. NASDAQ's down 2. Let's see. U.S. natural gas rose 37 BCF. And we'll see what this is doing to the gas market right now. So the first deal is up. You go from 291 up to 294. This gas market's getting bullish, man. That's going to be that longer term. That's an ABC structure on the way up. So now what we need is a nice little pullback to buy.
Yeah, we'll see what happens. As we know, that's only about 45 seconds of movement, right?
Yeah, exactly. No doubt. And
so stockpiles plus 37 billion cubic feet. Median estimate was plus 45. There's less supply.
Right.
Price is going to go up.
Right. Less supply.
Less supply means you're going to have to pay more. Because there's less of the product. Everyone's going to be battling. Just put it in simple economics, supply and demand, right?
Yeah.
So we'll see what happens. Yeah, it should definitely end up higher. I mean, that's not a nothing miss. Usually those numbers have been a little bit closer, I feel like, than 8 BCFs off.
Yeah.
Percentage-wise, if they're looking for 45, that's almost like an 18% miss from that difference, right? You know?
Right. And, you know, you're coming into, of course, the summer, and what does happen, in the summer is that, bottom line is that air conditioner alone, there's a lot of gas that's used by these, for electric, for plants, the plants themselves, the large plants, when you're pushing out, you get a big heat thing, man. We don't have a problem in Florida just because I think they built that infrastructure so dramatically at these plants because our temperatures are so extreme. Okay. But California has huge problems. Do you know what I mean? So.
Yeah. We'll see what happens. Now we're negative.
Yeah. That's quite a little bar right there.
It is. I mean, that's a 4-penny drop from the highs. That's where we always talk about whether you were long or short. You could have had a position maybe ready to sell up there, whether you were closing your long or maybe you had people up there looking to initiate a short.
Let's see, what were the boxes? We didn't get our head wrapped around.
So I happen to pull it up. These are the dailies. Let's take a look at the 11 a.m.s first, because those are the ones we like to look at. So let's say it was trading at 291 basically before it came out. Yeah, and it looks like, so 290 is where they kind of set the market, as in there's one that goes from 270 to 290, there's one that goes from 280 to 3, splitting it evenly, and then there's one that goes from 290 to 310. So that was actually nice. As in
you had it both sides.
You were going to be able to set up your trade basically. If you wanted to trade directionally, either way, you could have gotten a great risk reward, paying some premium with the two outliers. You know, 290 being either the ceiling or the floor.
Right.
And then you could have had it where basically you were risking dollar for dollar. And just to put it, we're almost back at 290. And so just let's say if we're going to buy it just to show. And exactly, we're risking 96 with a max profit of 104. You know, and as that falls on 290, we'd be risking 100 to make 100, and that's with each 10 cents.
Right.
Yeah. Amazing that we've dropped so much. Everyone's reading that report ferociously, and we know how, you know, the demand, right? Demand in each sector, demand in different parts of the country, stockpiles in different parts of the country. There's so much contained in those reports that the first jump for 45 seconds.
I love that commodity business. The commodity business is so cool when you think about that, because the supply and demand aspect of it, you know, once you wrap your head around it, you can seem to understand it more, you know, than an equity.
I think the fundamentals can sometimes like really drive it because you just can't fight them.
Right, exactly. You know, people need gas, people need oil, people need food.
You know, you have as opposed to, you know, what's, you know, a company like Uber, for instance, that's not even public, right? But it doesn't matter what happens in the next 2 years to them at all. Really, as in that's a play for the future. Whereas crops, I mean, you know, if it's really that low for 2 years, it's going to reset itself, right? And that's where, you know what I mean? It's going to just, the market comes back to equilibrium, as in when they're that cheap, no one's going to plant them, right? And then supply drops. So it really resets itself, and that stuff drives quick changes in the market.
And you can see why farmers could be so smart at this too, because
it is that fundamental. Right.
And it's that absolute.
Right, and they understand, well, you know, nobody's going to be planting whatever it is next season because they're worthless.
Right.
So as a result, maybe in 3 seasons there's going to be a supply drip. And then maybe I'll be planting at that point.
Right.
So then guess what happens? You know what I mean? There is a supply drip. Then the price goes up. But then everybody takes advantage of it because the price is up and they start planting and it drives it down.
It's a vicious cycle.
Right, exactly.
And then, you know, of course, what you have, folks, you have, you know, what is the cost of your fertilizer, your nitrogen?
Yeah, there's so much to that, right?
But it's pretty cool.
So if you understand that, you have a huge advantage.
Right. There's no doubt. Let's go take a look at these markets out here. And so it looks to me like the market's just going to kind of flatten out, folks.
I know. S&P's moved a total of 3 points since we've been on the air.
Yeah, XLF. So let's go over to the XLF, okay? So last night, the Federal Reserve came out with their reviewing of all the banks, right?
Yeah.
And
is this like a stress test deal?
This is the second part of it, and this is the most important part of it, because if you owned a bank, they're going to tell you whether you can buy back stock, whether you could do dividends and all of this, okay? And almost every bank did fine.
They did well. I saw it in your newsletter.
Morgan Stanley has to, out of the big banks, Morgan Stanley basically was not the weakest. They just didn't get. I have a feeling
they were the weakest from the way you're talking.
Well,
but
they didn't
just the fact their name comes up.
They didn't get a carte blanche.
That's what I'm saying.
What they got, they have to go back to the Fed by December. And give them another plan, but they did allow them to buy back stock and to raise a dividend. But they have to go back.
They have to do it.
The rest of the, you know, the Goldmans of the world and Bank of Americas, they don't have to. And so what they all did simultaneously, folks, which was just, I thought was fabulous, was they all put a buyback in and raise their dividends, right? So watch. It's like, this is, what I love about this is that because all the news is out. It's like, oh, all the news is out. And guess what? The banks aren't doing anything. You know? So, like Bank of America, they raised their dividend by 50%. And it's still only like less than a penny.
I know. I was going to say, it can be a misleading statistic.
That's
sometimes.
Right. But that was their news release. Okay.
I got you.
You know,
that's why statistics can be misleading sometimes.
Exactly. Okay. You know, so bottom line is that
they raised just right up there. They raised it to 7.5 cents. So it was probably 5 pennies, and they made it 7.5. It's like we're raising the dividend 50%.
Right.
You know, basically they added 2 cents to the dividend, 2.5 cents.
Exactly.
But still, it is. They all decided to raise it. Like
so, my point is that I
think I saw they're going to buy back $5 billion in stock.
Yeah, right. It's like, okay, all the news is out. And guess what? My take is they're going down. You know, but
I do know that. That's what.
Well, it just goes right to those. Look at those interest rates.
Listen,
well, here, no, this is, folks. This is what's really cool.
Let's go to the world rates. Can you bring up the world rates? As you start talking,
they
apply, right?
No,
they're
apply,
what you're talking about.
And the world applies in a big way here, okay? So in the United Kingdom right now, the 10-year is 0.9%, okay? France is, what, 0.2?
Yeah.
Germany's negative.
Yep.
Italy's 1.3. I mean, it's insane that Italy is less than us. We're at 1.48.
Yeah.
Spain, who's definitely broke, is at 1.2. It's like, okay, how does this work?
So why would you say that it's insane Italy's less than us?
Because both of those countries, in the correlation about what their GDP is, the relationship of how much debt they have versus their GDP, it's huge. Like Italy they have twice the amount of debt that Japan has.
Perfect. They're just debt loaded.
That makes sense. But people are still lending money to them.
Crazy. I agree.
But as soon as we come back, then I'm going to show you, because what I did this morning, I went over to Europe first to make sure that the banks were weak. And we go into the UK. You stay right there. So Tommy and I come right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is up 54. You get the NASDAQ up 5. S&P's flat, so the market caught a small bid out here. We have silver up 9 cents. Gold is down $7. Notes and bonds just do not want to go down. So we were just talking about the banks and the interest rates. So the UK this morning, and this is what you can always do, folks. Just, prior to our markets opening, you can move around the world and see what's going on. Well, this morning, Royal Bank of Scotland, again, was down 5.3%. Big numbers. And that bank, in general, is in trouble. There's no doubt about that. We had gone from 255, that's pence. Okay, they trade in pence over there. It made a low on Monday of 151. You're at 170 right now. So it's just being percentage moves, man. 5% for a bank to be down on a day again after
right? That's
being
really
down
the part.
23%.
Again,
yeah, big numbers.
Like I was saying to you during the break, though, and I don't understand the fundamentals of running an international bank, especially one after Brexit in the UK. I mean, that's where you see that they're trying to digest what that means.
Right.
But I'm saying banks make money with money flowing, money in, money out, right? Easy transactions, and they have all these new regulations that they have to fight through now to basically operate in their business. That's their business, money flow, and keeping track of money. And now they're going to be cut off from the EU and the euro, and they're going to have to do everything in pounds. I mean, banks in the UK are probably, and it's not even probably, just look at how they're doing. They probably have the biggest battle.
There's no regulations yet. That's what it is. They don't even know what they're going to be. Yeah.
Right.
They're going to make the deal.
They do. With everybody.
Yeah.
You got to start from scratch. It's a scary.
Yep.
As we see, investors are afraid for sure.
No, there's no doubt. This is going to be an interesting time out here, and it's going to be interesting to see. We
live in interesting times.
What the hardball approach is going to be.
Yeah. Yeah. And again, that's where. How hardball can you be? What happens if I don't know. And that stuff, I'm sure there'll be some really great articles coming up with how that can play out, right? Where's the leverage? Who has what?
Yeah, where's the leverage?
Because who can, what happens if you don't give them any deal? Where can you draw the line? How hard can you be with
what happened yesterday, and Merkel was smart, she's the Prime Minister of Germany. She said, no, we're not even going to talk. So we're not going to let them start with leverage.
Yeah, until they request to exit.
Exit 50, exactly.
Yeah. Article 50. Yeah.
Right.
And that would make sense.
Yeah, no, totally. But it makes sense on the other side.
You're either going to file it or you're not.
But I'd like to start first. And what's going to happen if I do file it?
Right. Yeah. That's exactly. Yeah.
Right. Tell me what's going to start first.
Yeah. That'd be like somebody going in and being like, "Can you talk about my severance pay? And tell me what I'm going to get for my severance because I'm thinking about quitting."
Yeah. Right.
Right after this conversation.
Right.
Do you think the employer's going to be like, well, if you want to quit today, I guess, but, guess what?
No.
If that's a surprise, quit, well, they're going to ask you whether you're quitting first, and then we can talk about your severance.
Yeah. And if you're in the financial business, folks, okay, if you even spoke of that for 1 second, your desk would be emptied right then and there.
Oh, yeah. I mean, you're out. Yeah. You want it out. Right. Well, tell them you want out, and then that's and there's a reason why they didn't make it easy. Right?
Oh,
because
sure.
you can't have people shuffling in and out for it to work. So that's what they're saying. Listen, this is a huge deal. It's not supposed to be easy to leave. If you want to leave, it's not going to be easy because we're part of a union.
Right.
You're breaking up that union.
Right.
There you go.
Yeah, no doubt. Let's go take a look at, I think we might be having some movement, let's see, in this natural gas. Oh, look at that. Yeah, so.
Intense.
91 to, well, actually, popped to 94, but we were at the $2.91 level.
Yeah.
And we're at 88 right now.
Yeah. I mean, it's good movement for something where the stockpile was lower than they thought it would be.
Yeah, no doubt about that. So let's go. I'm in Mr. Dave White. I just saw him in the den saying that someone's going after the #1 maker of chocolate, HSY.
Trading halt.
Let's see what we got.
Volatility trading pause.
So Hershey.
Big red letters.
Hershey Company. Mondelez.
Takeover bid.
Mondelez is going to have a takeover bid for Hershey, Dow Jones says. Let's see how much movement there was.
Jumped 7.6.
Look at that. Oh, my God, that's sick.
Yeah, so what are you looking at? 97.
So they halted it.
117, 20 bucks.
Did they just open it up again? They just opened it up.
They did. Okay, that makes sense because it was up. It said the headline was it was up 7.5%, and that's probably when they halted it.
It's up $18 right now, folks.
Like over 20%, 22%.
Oh my God!
Well, you got to take over bid, right? I mean, that's how you jump 22%.
Yeah,
somebody buys you.
The amazing part is that this doesn't supposed to happen intraday.
Okay.
But the Wall Street Journal, I think it was the Dow Jones news story. They got hold of it.
Yeah.
Yeah, and Mondelez was a Kraft spinoff. Look at that move. Wow. That is pretty amazing. Yep. So the let's see what this says.
Talk's going on for a couple months. Well, you know, reporters can figure something out, I think, when it takes that long, right?
Mondelez sent the letter to Hershey this month. Dow Jones says citing people.
Yeah, it's just basically given.
Wow. Quite a move. So that's what, you know, this is pretty cool, though. Oh, here, let's go back over there. Watch this. If I go into, I think Hershey's the Dow stock. No, it's not. It's not. So that isn't what, oh, look what it pushed forward, Coke. Isn't that funny? You know, just a...
Can you pull up the chart?
Yeah. Yeah. So
yeah, it's been climbing all morning.
Yeah. Right. And Coke's been a dog, actually. If we pull this back, no, it's not bad. No, it's not. It's good, actually.
It's like not bad.
No, it's good.
That looks like a 8-year up channel.
Yeah, it is. Selling sugar.
Ugh. Seriously.
Right?
It's a good business. Almost as good as selling caffeine. I guess they're both one and the same.
Yeah.
Pretty close.
Right. No doubt. I don't think caffeine can kill you as quick as sugar, though. You know?
Sugar's a bad deal.
Yeah. Different ball game.
Well, you are a man that loves your caffeine, so there's a little bit of bias in that. There is.
Yeah, they go hand in hand being addictive. That's what Mike's saying.
Yeah,
and that's probably a fact.
Selling an addictive product that's a good business to be in if it's legal.
Yeah. 877-927-6648. Let's go take a look at the XAU, the HUI, like you. So the XAU out here, that's laying out here at up 29 cents.
That's quite a chart, too.
It is. No, it is.
Quite a good chart.
I would rather, today and yesterday, folks, I would rather that we didn't get over these highs because it's going to be light volume. It's like, man, you know.
You want to plow through them.
What I would have rather, because I know it's going to be lighter volume, I like to pull back with light volume. You know what I'm saying?
Sure.
Because what happens is when you go over them, it's like, okay, now you're going to do a retracement on me. Do you know what I mean? And that's where I know that is like counterintuitive being a bull, but that's where, you know, you're going to say, okay, hold it, because if you go over the highs, you know, you don't have enough volume. It's like, okay, if you fail, guess what? Well, you could go down to the other side. Now, that's the bearish part of that. The bullish part of it is that the longer you do stay at the highs and not back off, it's
build
like,
some cause.
yeah,
There you
know. You stay right there, folks. Tommy and I are coming right back. And of course, we got our man, Mr. Basil Chapman, coming up next. Dow's up 74, Nasdaq's up 13, S&P's up 3.5. We're going to be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow right now is up 72. You get the Nasdaq up 15. S&Ps are up 3.5. We have gold down 670. Silver is up 9 cents. You know, it's interesting. Silver caught a great bid. You know, and it's up over this $18 mark. Oh, look at that.
And what's natural gas doing?
Natural gas catching some selling.
Not catching a bid.
No. We're at 286 right now, and we started out at 291. It looks like, right?
Yes, 291 was right where we were as the number came out. I just wanted to pull it back for some perspective. I wonder what was going on yesterday morning.
Yeah, that went south.
That's quite a
good.
rise and fall.
It is. And it was a huge movement. I mean, natural gas is really starting to perk up its head.
What time is that?
We went from it looks like 297 to 287, right? 286, right?
6:30 in the morning until about like 8:30.
And then they ran it right back down, right?
Right to the point. And that's amazing when you put it in. I mean, that's like a 10-cent move up and down. It's amazing volatility.
And so a 10-cent move in the futures market in gas is $1,000.
Can you pull up?
It's $10,000.
Can you pull up? I like when you pull up those, you know, where you can see how much per.
Yeah, it's sick.
It's the description of that contract, that futures contract.
When you see this is like amazing. So, the contract value is $28,850. You just take, you know, times the
yes.
$2.80.
Yes.
1 penny.
$2.
I mean,
that's $1.
$1 is $10,000.
Right. So every 10 cents is $1,000.
Right. So check this out.
It's a $1,000 move. Is that what you said?
Yeah.
Yeah. Right. $1,000 move. Yeah.
But check. This is what's really sick. See the margin requirements.
I was hoping you were going to go there next, right? Because that's where it matters. Where it's like it's $1,000 move, and all you had to put up
is $1,800.
Yeah.
Now I was trading this when you had to put up $10,000 on the margin.
Yeah, well, why don't you pull back the chart on what different world we were dealing with, right?
NG1, when you see this, folks, this is crazy. And, you know, I love trading this on the Nadex product now because, you know, if Nadex was there when you were having those monster moves or when you're just a lot higher.
There you go.
See, you know, it would be really great. And if it's up there again, which it will be, it'll be just as great.
Right.
You know? Because the difference then is that, you could, you know, make a lose 2,500 very quickly.
It could be.
What could be?
It could be back up there. I don't know if it will be.
Oh, yeah, right. No, I'm with you. Yeah, right.
I mean, 14 on natural gas.
Oh, yeah,
the world's going to have to change a little bit, which it can. You know, that's how it works, as in supply and demand. But it's going to have to change a little bit, I think, for it to get to 14, right?
Yeah, even 7.
That's what I'm saying. Yeah. You know, like those numbers are.
Listen.
And they were outliers, obviously, at that point in time, because they were just so short-lived.
That's right.
Those numbers,
That's right.
and they were outliers even for the fair market back then. And then the market's changed dramatically now, as in there's so much more supply of it, I think.
There is.
General,
well, picture this. Every one of those fracking wells, right? Even in our own Midwest, they get open again. They just have to get rid of all the gas. So there's gas in every one of them.
Right.
I mean, so if they get a way of capturing that gas, I mean, there's gas all over the place. Gas, folks, what happens is that when you're mining, oil and mining, but oil in general, that's the most dangerous part of the whole deal.
Okay.
That getting rid of the gas as you're going down.
Oh,
because,
yeah. But I don't know if that's natural gas, right? You're just talking about
it's natural gas. No, when they're getting oil out of the ground, the natural gas is what is getting wasted on a continual basis.
Okay.
Yeah, and if they could figure out a way, that's why this whole deal about we cannot export natural gas right now, and a bill's going through, and there's one company that's going to be doing it, because the argument is if you could, we have the cheapest gas in the world. In Europe right now, it's $14, and we're at $2. Then people would figure out a transportation to get it to the mines that you own, get it on a truck, get it over there. You stay right there, man. Mr. Basil Chapman's coming up next, folks. Have a great one. Have a safe one. Thanks, man.
Go get him, folks.
Thank you.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.